programs. As you all know, we deliver programs across the CDBG spectrum, including regular formula CDBG grants, the DR, the disaster recovery appropriations, and now the mitigation appropriation. And so today our focus is on the CDBG MIT and CDBG DR applications that are underway. And so today we are going to be focusing on developing a project budget, the administrative versus activity delivery cost subject that you all may be very interested in, since you've noticed in the guidelines that we are pushing everything to activity delivery on the project implementation side of things. Today's training will also include a walkthrough of the application. And so we'll get started. As I just went through, we're going to be talking about the project budget, administrative versus activity delivery costs today. And next week, the schedule includes the 4-factor analysis for the language assistance plan. And also we'll be touching on citizen participation requirements. And then the final training, the 4th Friday, will involve requirements on the environmental review that are relevant to your projects. Today, we'll get started on touching on the basic principles of the cost principles, which you can see there on the screen. Cost principles are a test that you run against all project costs or all costs involved in your project. And you're going to be focusing on costs that are allowable because they are eligible for the CDBG program. They are reasonable and necessary, allocable as far as having allocability that you can allocate the cost to one of your project activities. And then the very important element regarding cost principles is the sufficient documentation or adequate documentation of all costs involved in your projects. There are different types of costs. We will focus on those for a little bit this morning. Project activity delivery, administration planning. There are the pre-award costs that if they are eligible CDBG costs, then they can be reimbursed after the funding award if you can document those costs and they've been procured correctly. And then the topic of direct versus indirect costs. JD Pine is the financial analyst for the CDBG programs. She is not able to join us today, but she is key to being involved with the financial elements of building your project budgets. And so she is available if you have any questions as you work through your application process. So we'll get started on the basic cost principles. The effective financial management system, of course, must ensure that it's in compliance with laws and regulations. Of course, these laws and regulations are the laws and regulations under the Housing and Community Development Act, and they are also relevant to the Federal Register notice, the specific Federal Register notices that govern these allocations. As you can see there, knowing how to cost allocate is a huge part of how expenditures are tied to activities, and understanding the type of cost and then how to properly allocate it to your program. In this case, your projects that you are delivering, you are developing for the applications, and so that you can determine whether that cost is eligible or ineligible for payment. The cost principles are governed by 2 CFR 200. This is a super circular that came about around 2014 that replaced other circulars that were previously used by the program. The key topics, of course, are things that we focus on as you start the process of building the budget for your projects. You're going to be starting to think about program award and management, about the procurement that you will be performing to get these activities ready to go once you receive your award, if you do any of those through a pre-selection, through a pre-award process. The cost principles, as we discussed before, and then any requirements. We're getting a little bit of feedback, and please, if you are not speaking until you have a question, if you could mute yourself, possibly you might have to mute yourself twice. If you could do that, we would really appreciate it. And then please know to unmute yourself if you need to ask a question. The applicability and responsibility depends on the program role. There could be many groups involved in a project. We do have, of course, the state that we are responsible to administer the project, to deliver the project to the recipients that will then implement the project, or the state could deliver the project directly with DR. But so we have entitlements, state recipients, and then subrecipients. And all of these groups are responsible for 2 CFR 200. I will make a note that developers and property owners, being those, if you are running anything that is specifically involving household applications or households, then they are not responsible to the cost principles in 2 CFR 200. So this is a nice way to try to remember everything that's involved with the 4-point test, and then also knowing that you have to document your cost, is that all costs must be within RADAR, the acronym there that stands for reasonable, allocable, documented, allowable, and that of course equals that it can be reimbursable. So 2 CFR 200 does identify allowable and unallowable costs. Of course, as you know, there are costs that are ineligible no matter what type of activity is being delivered with CDBG funds, and these costs are outlined in our policies and procedures. They are also outlined and identified in 2 CFR Part 200, but some costs that are never allowed include entertainment, alcohol, bad debts. Some costs that are allowed, but with certain conditions, are an equipment purchase, such as firefighter equipment for a community facility. Some costs that depend on the federal funding source may differ from the specific appropriations, the Federal Register notices. Sometimes initially the Federal Register notice has stated that you cannot allow a non-federal cost share, but then most of the time there's a waiver to allow that. So there's just different, so always know that the allowable costs and the disallowable costs are going to be identified. 2 CFR 200, if there's any nuances, caveats to that, they're going to be found in the Federal Register notice that governs the DR and mitigation grants. So we discussed this earlier, or I stated this earlier, for a cost to be allowable, you want to run that test that it's a reasonable cost, that it conforms to all limitations that have been defined by regulation or specific program policy, must be in accordance with generally accepted accounting principles. It must not be included under another federally funded program, because that would be a duplication of costs being paid. And so right here for CDBG, we're covering costs that are not covered, or that costs that our program will reimburse, or costs that are not duplicated by another funding source. All project costs must be included in your project budget, including those other funding sources, to show that proportionately they are allocated to be paid by the different funding sources. And of course, as you're going to hear over and over today and through the rest of the trainings and through the life of the project, everything must be adequately documented. So to define cost reasonableness, we want to just basically measure it, that it's something that you would pay for, or the cost involved that does not exceed what a prudent person would incur under similar circumstances. So these considerations should be given is that it's a necessary and ordinary cost, that you can do a cost analysis to show that it's comparable to market prices for goods and services that are comparable to what you are looking at needing to procure to be able to make your project move forward. And that you have reasonable explanation and documentation if for some reason there's a deviation from what would be measured as that comparable market price. There are always unprecedented circumstances that may exist. We recognize that. We're all living through a very unprecedented time right now with COVID-19. So, things are, we're not going to say that there would not be an exception, but definitely reasonable explanation and documentation must accompany why that cost may be looked at as higher than what normally somebody would expect to see built into your budget. A cost reasonable analysis is a process that is used in procurement. The principles of cost reasonableness applies to all expenditures regardless of the source. So it's that, idea that if $1 of CDBG money is involved, then and even if other funding sources are slated to pick up the tab for a specific activity, that we must consider that cost reasonable analysis. And we do have more specific details to the cost reasonable analysis. That is something that right now you're just anticipating these costs. As you get into actually procuring for these costs and making awards after you've went through the competitive procurement process that is deemed appropriate for that procurement, then you would want to have more details on that cost reasonable analysis. We do have more details. That is something that we will discuss later as implementation starts for the projects that are awarded for DR and mitigation. So do expect that this is not something that's going to drop off now, and we will provide technical assistance in the future regarding that process. So the cost allocability is that you're just deciding how to allocate the costs that are involved in your project. You're deciding where to build them, where they belong in the structure of things as you're building out your budget. So there's 4 major cost types that are involved. You may or may not use all of them in one single project for the most part. I would say that for these projects, you're going to at least utilize 2 of these 4 types, and those would be the project / implementation and the activity delivery. And then because the planning grants are specific planning only grants that you're applying for. And please note on here that although we have listed that administration is one of the 4 types of costs that are structured for CDBG projects, that we are not reimbursing for admin costs. There may be admin costs along the way, but we expect for those to be built in as in-kind by the unit of general local government. But there is a way to charge for the actual delivery of the program implementation / management to deliver these activities, and that's going to fall under activity delivery. So we'll touch on that as we proceed further into the slides. Also know that all these costs could be attributed as direct or indirect costs. There's cost allocation plan. You also might have an approved indirect cost rate. Those will have to be submitted and approved by the program for those costs to be reimbursed. And we will also talk about who this would relate to, because there's different groups that are involved in, or different, you know, entities involved in delivering, you know, that collaborate on these projects. So the topic of direct versus indirect costs is going to be specifically relevant to whoever that entity is in that collaboration, in that collaborative effort to deliver the project. And we'll discuss that further. Always, you're going to hear this, like, it's going to be so repetitive, but documenting and reporting the cost is so ultimately important. We all get monitored from the state down, and so adequate documentation to show clarity and to show transparency of what has happened along the way is of the utmost importance. Records can be supported by the source documents. Again, we will, like, this is something that definitely will be presented in greater detail when we get to the implementation stage, but there's a explanation, you know, to show that basis of all the costs incurred. You're going to show actual dates of expenditures, and then also you're going to even segregate that out to show, you know, when something was invoiced as to when it was actually, the payment was actually made, because it does follow through to documenting that the payment was actually made to that contractor or that service that was provided. Examples there, as you can see, can include canceled checks, paid bills, payrolls, etc. Again, all of this is just so that you understand what's going to go into documenting those costs that you're budgeting for right now, so that you can build towards having those internal processes in place during the application period, but greater detail on all of these elements will be provided later on in another phase as we make awards and move to implementation. Cost documentation. So costs must be supported by adequate documentation based on the type of cost. So this will also be relevant, specifically relevant to the entity that's delivering the activity delivery. So we do want to see staff time, timesheets, payroll records, costs for materials, supplies, and services. This is important to relate to needing explanation of who would be involved, right? So you have the subgrantee, which is the unit of general local government, because the state is, you know, granting award to the unit of general local government. The UGLUG may in turn partner with a subrecipient to help deliver the project. The UGLUG might also contract with an entity, whether that be for project delivery / project implementation to deliver the project. And that's a competitive contract. So if you are that competitive contract that has been procured and you are seen as a contractor, and you are contracted with the UGLUG to deliver services that are related to actually delivering these activities. This is related to what most of you are familiar with as we term grant administration with regular program, but here we're talking about the actual, some of the same things considered, but it's program activity delivery. It's actually implementing the project, it's making it move. So if you are a contractor and you have been procured competitively, then in your contract, you're going to build these type of costs with overhead and profit, and you're going to design your contract to reflect how that will be invoiced. You will want to develop that so that you are focusing on the deliverables that you will produce in order for that activity to be performed and for that activity to conceptualize and to be a completed project and to serve the beneficiaries as stated in the application. But so you will build in profit, overhead, but you will still need to identify that you worked on specific activity delivery processes that you then can allocate to the actual activity, whether that be street construction or the construction of an overpass. I mean, that it's road and bridge, that you will be allocating your time towards delivering that project. So you will be needing to document that time that you spent. It doesn't necessarily, for a contractor that's competitively procured, your timesheets, your payroll records are not going to necessarily reflect the amount of the contract because you have built in overhead and profit to that contract. But you're going to just be able to document that these costs are tied directly to that activity. And so again, more details will be presented in the future as we move on. We're just trying to relate to giving some kind of guidance so that you can build your budgets today for your applications. The 4 types of program costs: project costs, activity delivery costs, planning costs, and administration costs, as we have noted thus far. There is, the plan right now in planning out your budget for your application is to know what kind of mix of these 4 types of program costs are going to be involved. Like I mentioned before, we can see for sure in a infrastructure, project that's delivering accomplishments for infrastructure, that your main activity is your completion of a road and bridge project or hardening of a public facility, and also the cost of delivering the other activities that are allowed in the mitigation categories, that you're planning this appropriate mix. Your project costs are going to be for those categories that we have defined that have the thresholds that you can apply for. You're going to be planning how those activities are then going to be managed and delivered. Those activity delivery costs will be built into your project costs. Your planning cap, as we have taken care of this as far as laying this out in the action plan, so that we have protecting the planning cap, that is the threshold for the DR and the mitigation grants. But the planning projects are standalone projects that will just have planning project costs involved in them. Again, we're not reimbursing for administrative costs under CDBG, DR, or MIT. So we'll delve a little deeper into project costs here. It, of course, is the direct cost of undertaking a project or service that delivers the accomplishments of what you're setting out to do. These projects could result in accomplishments of number of units built if you're doing some sort of housing project, or usually with infrastructure, of course, the main accomplishment is being able to report the improvements to, as in relevant to the linear feet of improvements for drainage lines repaired, of street improvements, etc. Again, this is continuation of some examples of project costs. It's your hard costs involved in your construction, and it's all of those soft costs that it can take also to, that are involved, that cannot be left out, because if they're left out, then the project cannot move forward. So we're looking at architecture and engineering, anything that ties to that project cost, to that activity being able to be developed. So, and of course, contractors build in overhead and profit. So all of those are just examples of your project costs. We're not doing public services, but on these two grants that the applications are open for, but this is an example of how a project costs for public service activities. It would be the direct staff time and then other direct costs, anything involved that is necessary to deliver the service. I know activity delivery cost is a relatively unfamiliar term across our program implementation and administration of our program, but we are pushing the costs that are involved to move these projects, to deliver these projects. We're pushing all of that to activity delivery. Activity delivery costs are a subset of the project costs. They also must comply, as we noted earlier, with the cost principles. They need to pass that 4-point test of being necessary, reasonable, allowable, as in the sense of being eligible, and then also allocable, that they can allocate to an activity. Sometimes you may have something that you would deem as an eligible CDBG cost, but if you're allocating it incorrectly, then it ends up being ineligible. So that's something that we will definitely, we're going to push that to greater detail that will be presented in the implementation phase. And it is also always available, the technical assistance that you can request one-on-one at any time, even during this phase of building your application budgets from our office. We will make sure that we work with every project that is awarded on an individual basis, because every project could be different in specific regard to correctly allocating cost. And so at that time, there will be much technical assistance offered. And but please feel free to request any of that at this time if you feel it's necessary, or that you need more understanding in order to build that anticipated budget. Reasonable activity delivery cost will vary, like I said, by activity type, and that's why, as we make awards after the application process comes to its deadline, and we make awards, that we will take that in consideration. There's no defined cap on ADCs as far as regulatory compliance, but the key here is to know how to project that reasonableness determination. And so usually the reasonable standard of practice is that it does not exceed what you're attributing to be activity delivery cost is not going to exceed 15% of that total project cost. I will talk about the fact that if a contractor, and I say that in relation to the firm that would be contracted with by the unit of general local government to deliver the program, to deliver the project, to implement and manage the activity delivery. As again, you may be familiar with that more in the regard of grant administration, but on this side of things, it's being pushed to activity delivery. So it's that firm. Now, if that firm is a regional planning commission, a council of government, then if they are procured competitively through a competitive, fair, and open competition process, then they can build in their contract, I'll back up just a minute, their contract is seen as an eligible activity delivery cost. The way they build their contract would be obviously to have overhead and profit involved in that as they're acting as a consultant. And then their contract should show that the scope of work and the deliverables that will be produced will be tied to these activity delivery costs that will move these projects. So again, if you are an UGLUG, unit of general local government, or a subrecipient partnering that the unit of general local government is partnering with, if you're anticipating any cost for activity delivery that will be delivered by the staff of the UGLUG or the subrecipient, then those anticipated costs are also built into the subset of project cost, but do not allow for profit and overhead. So that would be the anticipated actual cost. And those costs could involve indirect or direct costs as long as they are directly, like you can tie it. You can tie a string to, you can follow the line and see that it goes to that activity that you're delivering. So again, I will clarify that if a RPC or council of governments has been contracted, then obviously these are the type of things that would be in the contract, but the contract itself is an eligible activity delivery cost. If some of these items here would be being delivered by the actual staff of the UGLUG or subrecipient, then these are some examples of eligible activity delivery costs that you may build beyond that known contract price if you're contracting that work out. Also, the entities that would be building those, building your bid for that type of contract, these are the elements that are involved in delivering and managing projects for activity delivery. So these are the things that you would take into consideration that you would want to include as deliverables in your contract, and know, like if you're going to group deliverables together as to certain phases of the project, you may end up invoicing as to phases of the projects being completed, but then you still have to show or document your time spent on that project. These are examples of eligible activity deliveries of the cost for activity delivery. So as you can see, they probably are familiar to most of you. They do run into the same line of scope of work that we normally would allow or under administration contracts.
Marcy, did you want questions at the end, or would you want to?
Actually, I'm trying to get a gauge of, let's do a couple more slides before we get into the rest of them. I do want to stop because I feel like most of the questions are probably going to be on the subject right here. So, okay. So let's back up just, okay, so activity delivery cost, you are incurring that cost to implement the project, to manage or to provide oversight of a specific activity. You are building these budgets on a specific activity. In mitigation, it's, a couple of them are the general infrastructure activity. So you're defining your general infrastructure activity more specifically, of course, in your application as you are applying for it. And then there's the hardening of public facility as being an activity. There's the warning systems. So you're defining what it's going to take to implement that. Of course, as you can tell, just by the mitigation activities that are being offered, the level of what would be accounted for to actually make that project move as far as what would need to be the cost, right, is going to be significantly different based on activity delivery costs to implement and to successfully reach the accomplishment stage for hardening of a public facility compared to implementing and, the warning systems or, something of less. That's obviously you're going to know what kind of work hours and how labor intensive it's going to be. And so that's how you gauge what you would need to, what is reasonable, right, to attribute as a budgeted cost. As again, only the subgrantee, the unit of general local government, the subrecipient, they are the ones that actually incur the activity delivery cost. There could be another party, such as a regional planning commission or a council of government, that is delivering that for them, but that's a cost, that contract would be a cost incurred for activity delivery. Developers, owners such as the household owners, businesses and other beneficiaries cannot have activity delivery costs. I don't think really any of that is relevant to the two applications that you're currently working on, but that's just a little note. So the basic difference between project cost and activity delivery cost is that your project cost is actually that HUD eligible activity. It's that construction of a new levee. It's your, that contractor's time to build that levee. It's your overpass project. It's your, hardening of your public facility project. It's your actual project that actually, after it's completed, it's tied to meeting that national objective. It's something that produces that accomplishment that reports the beneficiary served and other accomplishments that are related to that. Your activity delivery costs are associated with that HUD eligible activity, but standing alone, they do not meet a national objective. They do not serve alone, it does not serve beneficiaries. And so your engineering design, your other professional services, your inspections, your environmental review costs, your group of costs that are grouped together under what a scope of deliverables that your contractor, and I use the word contractor as that entity that's going to manage this activity, those are all your activity delivery costs. Any appraisals for acquisition, the actual appraisal is an activity delivery cost that makes that acquisition happen. So it's those costs that we might have in the past associated as an eligible activity, but in fact they are the subset cost of the actual eligible activity. And so that's important to distinguish and start determining, start noticing the differentiation between the two, because an eligible activity has to meet a national objective when completed. The activity delivery cost, the subset of these project costs, they support that effort, but alone they do not meet a national objective. And so we will stop there for questions. And Candace, if you, let's see, I'm trying to see if I can get to where I can see them myself. Okay, I think I've got this, but if in case I miss any of these, if someone can be tracking them also, I'd really appreciate that. So it looks like we have a question. So it says, so to clarify, if a regional planning commission is included as a sub-applicant, their activity delivery costs are only reimbursable at cost. That is correct. That is correct for the UGLUG if they are building costs in for staff that are delivering the activity above and beyond what their normal capacity is. It's also true for that. And it's also true for any anything that may have to be purchased to deliver the activity, depending on who would purchase that, how that's determined through contracts. So yes, that is correct. If an RPC or a council of governments is included as a sub-applicant, their activity delivery cost is only reimbursable at cost. If you procure competitively, and by competitively, fair and open competition where that RFP goes out and it is selected based on the evaluation criteria as the lowest and best bid, then the contract may be billed as lump sum to include the cost incurred plus overhead and profit. Okay, and let's see. Okay, so another question, it says, so unlike the normal CDBG grant admin, it isn't sufficient for the UGLUG to be a dues paying member for us to act as their admin assistants on this project. According to CDBG regulatory compliance across the program spectrum of CDBG, MIT, and DR, if only a contracted entity procured by a competitive process may submit a proposal that builds in overhead and profit. If a RPC or COG is assisting in any aspect outside of that competitive process, then again, like I stated before, their reimbursement is based on that actual cost reimbursement. Okay, so are there any other questions right now before we move on?
There is one more, or maybe two, Marcy.
Okay, I'm not.
So it's okay. I'll read them for you. Just to clarify that if there is grant admin costs associated, that those would they would have to be paid by the applicant or as in-kind match, correct?
Mm-hmm.
Right, so there is no grant administration reimbursement. Everything should be able to be pushed to activity delivery. Contractor, so let's talk about this. If there was something that the UGLUG would be performing that is truly cannot be specific to the activity, that's more broad, but this isn't a program where you're managing a program of several activities. You're applying for an application, one specific activity. So everything really should be able to be pushed to activity delivery. If there are admin costs such as audit costs and that are always determined administrative, there are costs such as reporting that we do push down a certain level of that responsibility at the project level to the UGLUG. Now those are administrative costs, so we expect for those to be built in by local cash because you can't pay for a single audit in kind. But the reporting element of that could be performed by in-kind services. But there would be a certain point of knowing what needs to be included in your overall project budget. I mean, not necessarily would you have to build in an audit cost to deliver this project and to produce successful accomplishments, but that is something that an UGLUG has to take in consideration for their compliance as in program operations, of normal program operations. So yes, you would take that into account. Know that is going to have to be picked up by the local entity, and then but when you're talking about contracted, I'm sorry, I'm getting some feedback. If everybody could please mute if you're not talking. Okay. The contract, of course, the entity knows that it needs to undertake the service, or if they're going to competitively procure for a contract, that contract is building in overhead and profit, but a contractor is probably going to build in consideration of what's necessary to deliver the grant. They're going to be, but they do have to show hours that what they worked on can be attributed to delivering the activities. If they're going to do the reporting, then that's obviously something. If they show, hours shown for reporting are not going to be an eligible activity delivery cost. It just goes to what they're saying they're going to provide to the grantee. They may be providing that service on top of the implementation delivery. The quarterly reporting is what I'm referring to as the piece that is truly administrative. Reporting is administrative function. That is something that we will discuss further because it will be only applicable to those applications that are awarded funds. And so we will discuss that. And that is built on probably 2 or 3 hours on a quarterly basis. So that would need to be accounted for, obviously, because it's going to be a requirement of the project. So it will have to be accounted for as somebody delivering that through in-kind services.
Okay, and then there was one other question just about a conflict of interest. Is the RPC allowed to assist the community in procuring for those services if they intend to submit a proposal for those services? And I will say that is a conflict of interest. So we would discourage that. We would, in fact, disallow that.
This is Brown from Midmo RPC. I kind of learned through an example here. So on the administration, the reason I asked the administration question, and I get like pushing it through the ADC methodology, but so I'm thinking like in terms of like of infrastructure project. So it wouldn't be like a warning siren or planning grant, but it's like a regular project for a city that does fit into the mitigation category where there's going to be environmental review, procurement, contract management, labor standards, all of those kinds of things as normal. And so we would need to that through the ADC method as far as accounting for like our hours and all of that stuff versus a fee for like general services.
So it will be determined on if you are partnering with the UGLUG as a subrecipient to deliver it, or if they are contracting competitively and the RPC receives that award. That those are the deliverables that you would then bid in your contract. Yes, those are the types of those are not necessarily, the things like fair housing, and those are requirements of the grant. The UGLUG those are requirements on the UGLUG to receive the award. So if they need to define that that's being handled by in-kind, if a contractor is, a contracted entity is not going to deliver those things pro bono for them, or they're not going to pay their local cash, for an extra piece for what that details. I mean, those are things that are just seen as requirements of the grant agreement that the state has with the unit of general local government. The actual things that you can tie to that activity, like procurement and Davis-Bacon, things that make that project move along, then those are the things that you would build into that contract if you're contracting those services. If the UGLUG's contracting those services and you're on the other end of building that bid and structuring those deliverables, yes, those are the deliverables. The environmental review, those are the things that have to happen. Anything related to acquisition. I mean, you're not going to be doing the appraisals, but you're going to be handling all of the scope of work write-ups to procure the appraisers. You're going to be helping and assisting with that offer being made to that property owner. So any of those activities that, pull that string on that activity, then that is what would normally be seen as work deliverables in that contract. Does that answer your question?
Yeah.
Okay.
Hey, Marcy, this is Brandon Jensen at SimCog. So I guess I'm struggling with understanding procurement compliance and preparing this application. So in the risk analysis section of the mitigation and DR infrastructure narratives that are required to be submitted, we should not include any references to the RPC's ability to help the UGLUG administer this project if we intend to be procured competitively rather than being included as a sub-applicant, correct?
Correct, unless the UGLUG has procured for that and has that as, they pre-selected that contingent upon award, and then they can attest to that because they know that, they can, allude to that under risk management, the risk management questions. But
Okay.
I think that what Amy was, saying earlier with the conflict of interest question, I'm not sure who had the question, but
It was mine.
okay. So the unit of general local government, if they intend on not just partnering with the RPC or COG as a subrecipient, you do not have to procure for a subrecipient. Okay. But like I said, the difference is if you are a subrecipient, then you're reimbursed on actual cost only. Okay. You do not have to procure for that subrecipient. But if the party involved that's going to be doing the performing the project management and delivering the project with these activity delivery activities, then the unit of general local government has to procure that on their own. They have to put out that RFP. They have to decide the evaluation criteria. They have to then pull those in, evaluate them, and make that award. And they have to do that on their own.
Okay, so who should we direct our units of local government to for assistance with that procurement process?
You can direct them to
any number of our staff really
any
can
number.
be able to help.
I mean, we'll have to. We may, just you contact one of us, and we'll have the meeting that needs to take place up here to decide who's going to reach out.
Okay. Thank you.
You're welcome.
I think that's all the questions that we had in the chat for now. So you can continue
Marcy.
if you want.
Is there one more? Yep.
Marcy, this is Trent.
Hi, Trent.
How are you?
I'm good. How are you today?
Good. I have two questions. The first one would be like the prelim engineering reports. Would those be considered a eligible expense that could be reimbursed contingent upon award of the grant?
That can be counted as a pre-award cost if the grant is, if it was procured for correctly, okay, and if it's it has to be procured for correctly to be an eligible cost. It's a pre-award cost that could be reimbursed if the project is awarded if the project is awarded funding.
Okay. I just wanted to make sure. The next question I had, when that conflict of interest stuff started kind of popping up regarding the RPC and the unit of local government, it just got me thinking about how when engineers have prior knowledge or prior work but weren't procured already, they sometimes are seen to be deemed ineligible to apply for that RFQ. Would we not be considered that as well, since we already are working on these grants with the units of local government, and we have prior knowledge, or is that not going to be an issue?
Prior knowledge of an application is not the same work as delivering. But if you're working on the application, you just cannot do the procurement. Okay, there's nothing here. I mean, everybody knows the funding involved, the categories that are eligible. I don't know if there's, I'm trying to think of what would be the caveat here to
Well,
that
I guess
being.
what I was getting at is if we procure, like, so, if we're the sub applicant, then no issue, just that, we show the cost that we, incur. But if we decide we wanted to be the contractor and we put it out for, the city or the county put it out for procurement for administration, to hire a contractor, we've already built that relationship up, obviously, with the city working with that specific grant. I just didn't know if there would be a conflict there as well. You see what I'm saying?
I do. I think we
Okay.
need to spend time on that specifically, though, and have the information on slides and have, the resources available when we're speaking about it. So I would suggest that, we'll go back and include this as a conversation that will pop up in the next couple of weeks.
Okay. Thank you.
You're welcome. Okay, so I'm going to move on. Like I said before, the cost can be direct or indirect. Again, depending on if it's the subgrantee, the unit of general local government, or a subrecipient, or the contractor, those costs are all handled differently in the way that they are reimbursed or how they are included in a contract. Planning costs will not include activity delivery costs. Your planning costs for your planning application, that standalone application, will only include the project cost to build that plan. And so there will be no activity delivery costs involved, and of course we aren't offering reimbursement for admin. So all your costs for planning should involve the project cost that it takes to develop that plan. And like it's noted here, the rule of thumb is that the end result should be that plan, the outcome of that project. Contractor eligible costs. So these are those entities that, when I'm talking about a contractor, those entities that are delivering that project implementation. Of course, they can build in profit to their proposal. The contracts must include the scope of work for project implementation with a fixed fee price. That's knowing what deliverables you're going to deliver and how you're invoicing them, and then accounting for that with that fixed fee price. Whether a subrecipient or contractor delivers the project implementation, as we've stated before, the most important thing is that adequate supporting documentation, and it will need to include tracking of hours. Ineligible costs, if there is ineligible cost found through monitoring and oversight, those costs must be repaid from non-federal sources. And then, of course, we have the duplication of benefit requirement for these projects. This is outlined in your application guidelines and your guidance. Incomplete projects that do not result in a completed project because it will not meet your national objective that you have laid out or proposed in the beginning. The key of this is that a project is not, the costs are not eligible unless a national objective is met. So that would be considered incomplete, and there is the conversation that will be had for returned, recaptured funds. Tied back, all of the CDBG DR costs, this is a caveat for DR, not mitigation, but all the CDBG DR costs, regardless of whether it's planning or activity delivery or project costs, everything must show a tie to that specific qualifying disaster event. And in this case, the disaster event for both the DR and MIT is that DR 4317. It occurred from April 28th through May 11th of 2017. State law does not allow political subdivisions to provide funds from their resources for private purposes. So the example of that is that political subdivisions cannot provide normal operating funds for housing rehab, but this would not apply to the administrative oversight functions of these activities. Those can be taken care of by the local government. Other public facility or public project funding sources, generally MIT funds cannot, or CR funds and or RMIT funds cannot be used to replace funds from another agency or other sources that are available for a project. That ties into that duplication of benefits issue. All applicable state or federal programs must be considered for feasibility by the applicant prior to requesting CDBG MIT funds. Here's some other examples of the other funding sources that may be available for your projects. And I believe that concludes the financial portion of the budget preparation for your applications today. As I mentioned, we'll be pushing things to greater detail in the future, and we will follow up with the procurement issue and the procurement/conflict of interest issue so that we can provide resources in a slide deck for that conversation. Is there any other questions before we move on to the application walkthrough? Okay, thank you so much for attending this part of the presentation today. I'm going to turn it over to, I believe, Amy Barnhill for the application walkthrough. Please do note that at any time you can request technical assistance for budget prep from our team. Thank you.
Sorry guys, let me get all the way unmuted here and I will share my screen. I'm just gonna do like a super quick run through on this application. And I'm just gonna go through, let me see if I can get it to share. There we go. Is everybody seeing it? Hopefully so. I'm getting no confirmation. Okay. So this is our new application. They are both for DR and mitigation are pretty much the exact same with very few exceptions. So I'm just going to do this high level scroll through basically just to hopefully refamiliarize those who know our program with the application and see how it looks new, improved, and condensed. And for those that don't, it will be just like I said, a high level overview. A lot of the stuff is pretty self-explanatory, so I won't go into much detail, but if you have questions, feel free to interrupt me at any time. I'm also not going to go through the guidelines as well as the narratives. The guidelines, like I said last week, pretty much that was what my presentation was mostly about last week, was just that high level overview of the guidelines. And the narratives, again, should be very self-explanatory, but we're happy to take any questions if you have any on them. So again, for those of you that are familiar with our application process, we used to have basically forms A through Z, and that was how we recognized the forms. And so we're all trying to learn to not recognize them as lettered forms anymore. They are just names of forms. So this first one is just eerily similar to our Form A that we used to utilize. It's just going to give us that high-level project profile overview of who's applying, who's preparing the form, if there are any sub-applicants, their information, and then a couple general reporting information. I will point out that because as we all continue to work remotely, we are, when we're funding these applications and when we're communicating with people, it's by email a lot. So we have specifically added state rep and senator email information that we need to have included in the application up front. The difference between DR and mitigation on this page is just this item number 5 here. Obviously, you're only applying for infrastructure if you're applying under DR. But if you're applying under mitigation, there's a couple different choices, and so this is just going to tell us what you're planning to apply for on this application. Project beneficiary information, including the LMI, ever important information. As I think we've all said on repeat, and we're just going to continue to be on repeat, the MID information, that most impacted and distressed area information, this is where you're going to designate whether your project's inside, outside, but it's impacting, or you're outside and it doesn't impact. National objective information, pretty standard. Cost data information. Again, this is fairly standard. Just going to be that high-level overview of the amount of funds you're requesting, either DR or MIT, local cash, in-kind, etc. There's a couple of random questions over here on the right side. You'll see, is this amount $200,000 or more? And is this project anticipating program income? And we just kind of stuck those questions in there because they'll tie back to some stuff later on in the application. But this $200,000 or more, that's going to trigger a specific Section 3 certification requirement. So we, if it's below $200,000, then you're not going to need to submit that certification form. And again, we'll kind of go over that here in a minute. And then the anticipating program income, because of the way that these projects are, I don't know how eligible this will be, but it's just good for us to know that kind of information up front as well. Floodplain and environmental information, again, it's just high-level information on that. Both Kim and Allison on our team will be doing that presentation, that last fourth installment of the training. That's going to give a much deeper dive into the environmental review requirements, but this is just kind of that, again, high-level overview on that. And then that project description, this is where you're really going to tell us what the application is for and describe it to us. Where is it at? What's the need? How is it going to impact the community, etc. So, moving right along, Residential Anti-Displacement and Relocation Assistance Plan. Again, for those of you familiar with our program, you would recognize this form, and it would normally have a signature requirement. And we have tried so hard to try and cut and, I should say, trim the fat on these applications and not require 17,000 signatures across the whole application. So we have included this as well as several other certifications in this final page of this 19-page application. It's going to have a certification that's going to tie back to a lot of this information, but we still need to know about this anti-displacement and relocation assistance plan. So you'll have to read through this information and just answer simple yes or no, there will or will not be displacement. Hopefully there won't be. If there is information about the addresses affected and any plans to handle the displacement can be verified in this box. This page, again, recognized as the former signature page. It is just informative documentation about the E-Verify requirements that we have, and as well as anti-lobbying certification that we have. You will note here in the center, even though we don't, we're giving you a bunch of this stuff and we're trying to cut as much as we can on signature pages, we still have to require the full MOU, and that means all pages of the Memorandum of Understanding that these applicants and any sub-applicants would obtain from the E-Verify program. So be sure to always submit that as well. Anti-lobbying certification, again, this final page of the application, you will be certifying to this information here. We just have to include it as informative. This next certification page, unfortunately, we could not cut out every single signature page because we have state requirements, federal requirements, and even local requirements. So this is one of the requirements that the state application, state requirement form in the application for our Department of Economic Development. Again, it's just a certification about E-Verify and federal work authorization programs, not employing unauthorized aliens, etc. This one's still requiring a notary. This is the page that's probably mostly what we talked about today. So it is hopefully going to be a lot easier for you all to fill this application out, and this form in particular, out after today's training. I know I was glad to just sit in on it because I am still learning about ADC. So a lot of your all's questions were good because it was helping me learn. This first column here, this is where you're going to pull the actual activity, the eligible activity list, which is found in the guidelines. Again, those are both online for, well, I shouldn't say both, all three, for mitigation planning, and the DR infrastructure. All of those are online. So you will pull one of those eligible activities names and insert them here. And then it's just, again, fairly self-explanatory, just filling out who's paying for what. First column is for CDBG, MIT, or DR, applicant cash, including loans, non-cash resources, which is our in-kind match, other state or federal grant, and any private funds. Unfortunately, I will say at the time, we do not have these forms with formulas inserted into them. So you're going to have to pull out those math skills that you learned in school and you thought you'd never use again. We're going to pull them out and fill them here. We're going to just make sure that that math is good across into column F. And as Marcy pointed out, we aren't handling CDBG administration in this, but if there are administrative costs, you'll just dictate which resource is going to be handling those administrative costs. This is just, if you needed any more detail than I provided you, instructional page on the preceding form. This page is, again, fairly self-explanatory. It's just to help us. We always, as we talked about last week, we really want to encourage, especially in these MIT and DR programs, we want to encourage, partnerships and leveraging our funds. And so this helps us know, what the applicant's tax base is and how much money that they're taking in, and that helps us in our calculations to score the application's leveraging score. Local effort, again, this is a continuation of just helping us determine the leverage that is available to leverage our dollars. These, again, used to be signature pages. They are no longer signature pages. And then if there is a sub-applicant, same information here, fairly self-explanatory. And if we couldn't be more self-explanatory, we have an instructional page here for you. I will point out that this is noted, applicants and sub-applicants, even though you're filling these forms out, we still need to have a copy of their most recent financial statement submitted with the application to support this information you're reporting to us. This is where Marcy kind of mentioned earlier about if you're pre-selecting any professional services, any of the activity delivery costs, this is where you'll tell us that you're pre-selecting them and documenting how many proposals were received, getting the documentation for selection, etc. So this is where you'll fill out that information if you so choose. It is not required to pre-selection. It is optional. And again, please contact us if your applicants want to pre-select for services, and we can help with that. As a HUD requirement, we have to have the civil rights compliance page in there that just documents who the beneficiaries are. If it's, if the applicant is on behalf of a smaller subsect of the population of the UGLUG, then that would be the difference between these two as usual. So that UGLUG's information on their total population will go in this box 1, and then the subsect of the applicant, that is the sub-applicant's population information, will go in box 2. Again, apologize, they are not formulated to total. We are working on it for future. All applications, again, like we talked about last week, and I'll talk about it more next week, are required to have a pre-application public hearing. And so this is that community needs assessment. For those of you familiar with our program, we have substantially reduced this from 4 pages to 2. And it's just everything is selected, doesn't exist, good, fair, poor, etc. These have to be submitted with the application. If LMI is the determination and there was a survey to be done, this is the survey instrument that needs to be used. It's the same as what we've had in the past. So if you've already started and you're using something, don't worry about it. It should be fine. It's the exact same. We will just need the information on the income limits that were used. That's the only information you're going to fill out in this form at the time of application, and only if a survey was conducted to prove LMI. If that survey was conducted, however, you will fill out the survey tabulation sheet. Again, it's fairly standard. I apologize. It is not formulated to add these columns for you either. We will work on it. Extrapolation of the survey information will go here in the middle. I know this, when I first started with the program, it was super confusing to me. So if anybody ever needs help with extrapolation of the surveys to the 100% of the population benefiting from the project, just contact us. You can contact me specifically if you want to. I'll help you with it. We do want, if a survey was conducted, we do want a signature on who was the authorized person in charge of surveying and the methodology that was used. Because as most of you know, our surveys are good for 4 years now. So we want to have that month, date, and year that the survey was completed. And here's that. The all-encompassing page is our application certifications page. This is the one big signature page that we require. I shouldn't say the one, but this is the big one. So this is where we're going to document, as those of you familiar with the program, again, we used to have all of these forms required in the application. We have those all provided as samples. We still do require them, but they are posted on our website for both mitigation and DR as samples out there. And, you know, we just felt like that it was inappropriate for us to tell UGLUG specifically the exact language that they have to have in their fair housing ordinance or their procurement policies or conflict of interest policies. And so we provided samples, and we still require that all of these be submitted, but it can be done as each unit of general local government determines as appropriate based on their local requirements. So all of these will require signature pages. However, they're just adopted at the local level, and then they're submitted in with this application. So that is the long and short of it. I don't need to read through this list because I know you all can read. So if you have any questions, this is kind of what the application looks like now. I'm super proud that we've cut it down to 19 pages. I know it's kind of only because we have a list of 15 other things you have to submit along with it. But again, it's a lot more condensed than we've done in the past. Is there any questions about the application?
Hey, Amy, it's Brandon at SimCog again.
Hi.
Okay, I have 3 questions while walking through this. So I'm just basically working my way down the forms. The instructions for the activity cost page, basically the budget, it states that the costs must directly identify or must align. So looking at that item number 1, they must be in agreement with the engineering report. So does that mean that we should be working with the engineering firm to have them update any PER cost estimates to include what we estimate for the cost of ADCs?
It's a good question. ADC questions are not mine, not mine. But I feel like as long as they align within reason, that we wouldn't make them, you know, necessarily go out and resubmit. If it's going to be a substantial disagreement in the cost, I would say just providing some explanation either in the PER or,
could you include like an addendum from the city just saying in addition to these costs estimated by the engineering firm, we estimate these additional costs under these line items for activity delivery?
Yeah, I mean, I feel like most of the activity delivery, again, based on the examples that Marcy gave earlier, you know, most of those things should be known up front. So, you know, they're typical costs associated with a project, regardless of if it's an ADC or if it's, you know, how we would normally formulate those as eligible activity costs in our regular program. So that's why I'm saying I feel like it should be within reason already. If there's a vast difference, then yeah, they would need to provide some kind of documentation and explanation as to what the difference was.
Okay, my next question, and it's just a minor thing, I just want to make sure. So in the instructions for the local effort forms, the first paragraph references blocks 3 and 4 that must be completed by the applicant, but there is no block 3 or 4 in the local effort forms. So it's the very first paragraph under this. I just want to make sure I'm not missing anything from the application. I only see blocks 1 and 2.
Yeah.
Okay, perfect.
Yep.
That's fine.
That's just us. Which
Okay,
again,
and then,
probably because we missed it when we were trimming, so we'll correct it. Thank you.
Oh, and let me just say, I really appreciate what you guys have done to reduce these applications. They're definitely easier to work with than previous forms. My last question, so if a community does decide to pre-select a firm to provide activity delivery costs, so basically what we would previously consider administration, which section under that pre-select form should that firm be identified under? Because I mean, some of those costs would fall under engineering design because we would help procure that firm. Some would fall under construction inspection because we would procure that firm. So should we, like, if a community competitively procures an RPC, should we still list that under administration or put it under other?
That's a great question, Brandon.
Sorry, I keep throwing stuff at you.
No, these are good questions to ask. I am not sure I mean, I feel like I would know the answer personally, but I know I'm still learning about activity delivery costs. Marcy, are you on still? I don't see that she is still on. I don't know the answer, Brandon. I apologize. Okay. I feel like I know that I would want them associated with the lines of service that they are directly tied to, but that's just because I'm so stuck in the old way of doing things, and I'm still coming around to the ADC. So Amy, we'll get a clarification. Go ahead, Ella.
Oh, can you repeat the question really quick, Brandon?
Yeah, so looking at this form, like if a community competitively procured an RPC or some other firm to provide what we previously would consider administration services, but now consider activity delivery, that firm would technically be providing activity delivery in support of all of these different services. So I'm just not sure where we should be listed under, because the community may competitively procure us to assist with engineering design and also competitively procure the engineering firm itself. So at that point, in my mind, looking at this form, you would have 2 different firms listed under the engineering design service.
Yeah, and I think great catch. You know, I think the reality of this form is, and like Amy said, it was like, and by the way, like I'm Ella, I'm a consultant through HUD. Through a company called Civics, working with the state of Missouri, just so you know who I am. But so yeah, I think in tweaking this form and trying to simplify it, that is probably an adjustment we should have made, and clearly didn't clean up this table. But you're exactly right. It's okay, you know, if you're of course like competitively and compliantly procuring the RPC to support kind of in a variety of these categories. But again, the work they're doing is like directly tied to that, you know, the overall project cost. So it's captured under an activity delivery cost. I think what you'd want to do is just put them under one of these categories where you think they might be focused the most, and just make a note saying, like, you know, we intend to have this firm also, or the RPC also, support us in A, B, and C, you know, but we're just capturing it per this form in this box.
Okay.
Does that make sense? So yeah, I think it would just be picking the one that you think, you know, kind of works the best, and then just adding that little note, since, realizing that the admin is now removed.
Yeah, I assure you, Brandon, we won't count points off for this
Agreed.
being
Okay.
Yes.
the way that it is, because we know it's kind of our fault, or not kind of, completely our fault. So you support the information however, or report the information however you see fit, and then just having any kind of little explanation will be good for us.
Okay.
Yeah.
Thank you.
Yeah, I think the intent is just to provide the information, right? So, yeah, I think a note will be sufficient to kind of capture that they might be cross-cutting across a few of these categories.
Okay. Thank you.
You got it.
Okay, and it is 10:30, but I do want to address the one more question that we had in the chat, and I will address it again, just to be on repeat next week, about the needs, the needs assessment survey and the public hearing requirements during the time of COVID. And I think I even maybe touched on it a little bit last week as well in that high level discussion about it. But we are very understanding. Obviously, if you could see me, you could see I'm in a t-shirt in my own house. So I'm not going out to do stuff, and I don't expect that necessarily every single community is going to be willing to go out and do stuff and deal with the public either. And so there are options that we are allowing for virtual public hearings, and, you know, things like WebEx. You know, we can still complete a full training that we would normally do in person. The public hearing would be under the same circumstances. We would still require that there be appropriate notice given and appropriate accommodations given to those people who might possibly have limitations to be able to do a WebEx or some kind of other virtual platform, having a call-in function as well. Hopefully everybody has access to a phone. If somebody doesn't, you know, trying to accommodate as best as possible is what we're recommending, but we can't, you know, we're not doing things in public in person necessarily. So we're obviously trying to be as understanding, and HUD is as well, as understanding as possible of the need for alternate solutions when doing these public hearings and the needs assessment. So Sarah, hopefully that answers your question as well. And like I said, I'll go into more detail next week during next Friday's training. Is there any other questions before we end today? Okay, I feel like that was the 5-second count, which is what is appropriate on these virtual trainings. So if you have anything, feel free to reach out via email. Everybody should have our contact information. And for those that had questions that we were unsure of answers, we're going to come back and circle back with you. We will do so. Again, just to remind everybody, these were recorded and they will be placed out on the website probably by next week. So thank you, everybody. Have a great weekend. Take care, and we'll hopefully see you all next Friday morning.